Okay, I'm going to go ahead and get started as people join. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education, entertainment purposes only. So I thought it would be important to do a live stream given the situation that we find ourselves in. So I'll just kind of recap uh, where we are, and then I'll answer your questions. So the Dow Jones, it's a couple interpretations. I still like this flat idea right now. Something like a one, two, and maybe a three, four, five. That's just finishing up this fifth wave. If you look here, you have that divergence here. Now, if we erase the divergence, then I would go to a three-wave structure and kill the flat and just go at WXY, and then we would probably push up just a little bit higher, but not much higher. So the Dow Jones could be finished really at any moment. And now, if we do have this different structure than the Dow Jones, we could see it push a little bit higher into this area, 35,000 area, and erase divergence, and kind of a capitulation short squeeze. But I believe this move is almost over. In the SPY, did hit a short area today. It's really clearly three waves up, and within that third wave, you can easily count five waves. So again, this could end at any moment. So this is a corrective structure. This is not an impulse, guys. This is not something you would think of as the direction of the trend. This is counter trend. The trend is this way. So a lot of people today, they FOMO in, or they're like, I've seen so many bullish posts today, so many bullish posts about people. There's so much euphoria. It's actually really hard to believe because a lot of stocks are actually off of their July high still, and the market is, but yet the euphoria, I think, in some ways exceeds the point when we were here. So it's a very interesting how sentiment could just reverse and just forget all the bad stuff that happened, and now it's like completely throw caution to the wind and it's going long. I do think we're going to go down. Now, I did say that if we bounce like we did today, the chances of a super crash, I think, are a lot lower. So I do think we will come back down into this area. We need to, let me make sure I adjust my target based on this pump we had today. Somewhere around 423 I'm looking for, maybe as low as 406, somewhere in this area. And then we could get another push higher to these higher levels before we get the meltdown that everybody wants and expects. But I do can't rule out the possibility that we will blow through 406 and go down. But I think the likelihood of that now is lower than it was 24 hours ago. So people betting on this is it, this is the crash of ages, I think they'll be disappointed. I think you will get this nasty pullback, but I think unfortunately the connector wave may continue to extend, and we get this drop later because of this, the way we moved off that low. So that's just I'm just giving you my thoughts, and then what this would turn into is a bigger WXY, right? Something like that. So that's like something you need to think about if you're trying to short this market. Like today was great opportunities to go short this market here. And if you did that, you're pretty much locked and loaded for this inevitable fall in the Y leg when that happens. So again, I think you can't rule out just a little more upside, but I don't think there's going to be that much more coming. And that's why I think it times perfectly with the PCE report in that coming in, in a way that shocks the market. It just seems like that's the perfect piece of news, and it's going to be timed at the perfect point where this will be. So I'm just kind of giving you ideas. It could be something different. It could be, Russia decides to nuke Ukraine, or it could be Taiwan gets invaded. It could be so many possibilities. It could be earnings, report that went awry. all excuse me, all we know is we got this drop that I know will come in the next 30 to 45 days. Then, of course, technology did break the high. Now, technology shows it has a little more upside to go. Short area, this gap here, I don't think it's going to get this far, but maybe a little bit higher. And then it should succumb to this bearish pressure lower. Okay. So again, if you do believe it's going to go to new highs, then you'll believe it. Nvidia is going to go past 500, go back to 600, and in those levels. That's what you have to believe. You have to believe Apple will take out the highs, and those things don't seem likely. So the upside is limited because those big Magnificent Seven, except for a few, are topped out. Some like Google are not topped out yet. IWM. Is in a short area right now as a flat pattern that should probably pop up one more time to finish that fifth wave. Again, if it doesn't do that, then it's just a three-wave move. And then I was showing someone on my Twitter feed, where did we finish in technology? I think it was tech, or maybe it was the SPY, but here it is, the 618, like exactly to the penny. So that's a typical retrace. Usually that's a typical one. Going to the 786 is kind of atypical, but still can happen. So just know that that's a warning sign for new long positions. So if you got excited about the price action today and went back in the market, I think you're gonna regret that decision. And I do think that's why it's better to not trade with emotion, because really this is where you wanted to buy, and this is where I was saying to buy, and we got this nice pump, and then this was a coin flip whether we were going to get this or not, but it did seem likely that the dollar needed to drop more, and it did, and then China still needed to finish its leg higher, and which really should finish at any moment. Again, I don't think it's coming up here. In fact, we may already seen it reverse. Yeah, I think it's very dangerous to be going long this market right now. Very, very dangerous conditions in this market. Because I still can't rule out the possibility that we do start the next leg of the bear market and have the floodgates open. But I just think with this pump, it's like less likely. Because now you really don't have an impulsive structure down. This is clearly a corrective structure from this peak now, because now you have a 3 and a 3. So the odds of this collapsing are slim because you don't have really this impulse anymore. You could have said this was like a 1-2, 1-2 and dropped. That would have been ideal. That would have really set you up for that. So this is like a corrective structure that I think will end here and then extend higher. So I do want to close any short positions here and take long positions. In especially the Magnificent Seven. This will probably be a good opportunity to get long those if you missed those moves earlier. And of course the triple bull ETFs. So this is the setup. All right, guys, I'll go to your questions. And yeah, Bitcoin pumped, but so what? It's easily that was our short area. It got rejected. I don't think it's coming back up here. I'm sad to say it. We are going to come down. The next target is 21,000. This is just a three-wave move. Like I said, this could have been a 1, 2, 3, 4, 5. It could have been a W, X, Y, and that's what it turned out to be. And then this is just three waves up. And I know people are excited about Bitcoin, but it's just not time yet. It's just not time yet for Bitcoin. So that's what we have here. And but the time will come. And the reason we don't think Bitcoin is also bottomed is the crypto equivalent stocks still have, I think, more downside. Now, Mara, we predicted this pump. I gave everyone this buy area, and sure enough, we got the pump. But now, look, the X is over. So now we get to go back down to the $7 level. So that's kind of, guys, this is like not rocket science. This is easy money that you could be picking up right now using my system. But maybe the X can go a little bit higher, actually. Just looking at the target to get to this area. So let's see if we can back into that level and see where that would be. So that would get you an X up to 1582. So we still may see more upside in crypto, at least these stocks, and then I think it will drop, but there's no guarantee. This could end at any moment. Riot, I think, is the same thing, just not as clean. And again, this should fail at some point. Okay, guys, and then of course the big news was the SEC lost the case, and again, look at the buy area, almost exactly to the penny, and basically a vertical price action on GBTC in the bullish 1212. But given where I think Bitcoin's going to go, what I think we're going to see with GBTC is the 5-wave move up and then a drop. So I think I showed this possibility at one point where you get something like that, and then you come back down to here, somewhere around 1548, something like that. So that's kind of what I'm thinking if I'm trading this now. So then, yeah, I think that's good enough. We'll go to your questions now. Yeah, looks like a 3-wave move. I see 450 is rejected. Hang Seng opened in the sell. Yeah, the Hang Seng, they ordered banks and funds to buy stocks. They're in a super panic because, as you know, their stock market, a low stock market, communicates that there's something wrong with the system, right? And image is everything over there, so they can't have a bad stock market. And really, they do need to be worried because we are going to push down, but they really can't afford to break this pivot because then, I mean, it's going to be a disaster, a catastrophe for their market. So I do think they are worried for good reason. I would be worried if I was an investor right now, given this structure and what I showed you with YNN the other day I was telling you about, and how that's showing a much bearish structure. So here, this is your connector. You see, this would fool. A lot of people would say that's your connector, but really it's right here. So if you look at it, and you got the target right there. So I could probably move this back down here, and I'm not trading it, so I probably didn't have my chart updated. But this is where it's getting rejected, guys. Look, bam. So my guess is the good days are over in China. If you happen to FOMO into it, it sucks to be you. But I think if you use the opportunity to short, this was a good area to short that, and we have the next leg lower coming. That's what I'm seeing here playing out. HYG and rates. Okay, yeah. HYG, we haven't looked at that in a long time. That's an oldie. Yeah, I don't even know what we were saying with that. Okay, so this chart hasn't been updated in like 6 months. So we had this, and I think this was my update. Wanted to see a push higher to 79 before a complete collapse. So we have this 1-2-1-2 setup. We want to see the HYG go to 51.48. I guess that's your credit event, right? Everyone's predicting this credit event. Well, this chart is telling you, yes, there's going to be a catastrophe and high yield corporate bonds coming. The question is this finished? Let's take a look. This looks like it was done here in an A, B, but see, this is too much. So it's 5 waves, just like we have it. So it's either this and it's finished early, or it's got one more high. But this is getting this is tough to say. I mean, this is like a coin flip right here. If it's gonna pump and crash or just crash, and then this is a 1-2-1-2 ready to. So I don't know. I mean, more than likely it's gonna do like what I have here. So that's the HYG rates. So rates, like I mentioned before, when rates drop, that's bullish for the market, and that was no exception today. So let's take a look. So we probably finished this fifth wave here, right? That, okay? So the question is, are we done this fifth wave, the higher degree? You see, we didn't really get enough extension here, right? We didn't really get enough extension. Now, technically, it could be done, and we're starting this decline. So that would be the TLT is a great buy right now. So I mean, I can't tell you if we're going to extend or not. We don't have to extend. So I think you're just going to have to do what's best for you here. But it does seem like, let's look at some of the RSIs and see if there's a clue here on a higher degree. So we're going to be looking at this whole fifth wave move finished. So we would need to break this trend line here. So when this weekly breaks, then you know the top is in long-term rates, and you're going to get this flush down, which I believe will be bullish, a little bit bullish at first, and then turn massive risk off, bearish. It starts off bullish, and then it turns into bearishness as it's deflationary. So there's no signal that says this cycle is over. So this fifth wave can extend. So I do think it's kind of like a coin flip here. That's why I don't like trading the rates. But do what's best for you. So this fifth wave could extend. Technically, it should still extend. This is too short, but who knows? And then the 2-year, again, we went back down. We're in this fifth. It looks like it should just about come to an end. It looks like it needs one more high. I don't know. Did we break that here? No, we didn't. So it's still got a little more upside than that. Then this wave should be finished, and we should either get a pullback to 4.3. And if we look, let's see. If you see how we have some divergence and then it drops. So what I'm thinking is now looking at the daily, and I didn't look at this earlier. Probably it's a better way to label it this way. Again, the 2-year is different than the long-term rate. Is something like this. So my guess is the short-term rates should be pushing higher, but we could still be in 2 in the short term, and then that should finish. So there's an impulse. See, this looks like an impulse, and some kind of impulsive structure. So I don't know. It's tough to say, but I wouldn't be surprised to see it drop a little more. But it looks like to me short-term rates are about to break out. Again, is the PCE report going to be hot? Is this going to drive the short-term rates up? I don't know. I'm just saying the setup looks good for higher rates. But on the long end, that's not the case. It looks like there's some kind of risk off, developing. So could there be a difference? I don't know. I'm just telling you what I'm seeing. This could extend a little bit more, but we'll see. Rates is tricky. I wouldn't really mess with the rates. And they're not, I mean, I look at it and I'm like, the way this bear market's been going is when rates go up, the stock market goes down. When rates go up, so more than likely higher rates will mean the next leg of the bear market. Lower rates would mean bull market continues. The bounce continues. SPXS, let's take a look at that one. Yeah, I didn't really look at the SPXS, but as you can see, the buy area was $12. We got to $12.75. And then of course we rebounded, and then look, we broke this downtrend line. We broke it. So this cycle is over. So we should retrace this move. This move should retrace right? Is it going to just retrace this bit? No, I doubt it. I doubt it. So chances are it's just like I said, there's another swing higher. So let's take a look. Um, as you can see, no divergence at the peak. None at the peak. So it's clearly a corrective move off the bottom, right? So that's not an impulse. So that also is a warning sign to the bears that yes, we could correct deeper, but chances are we're going to still go higher in the market. And then of course we had this three-wave move. And let's take a look at where the buy area is, and we were in that today. So today was the day to start buying this. If you decide to want to play this symbol, this is your buy area, and it could end at any moment for the next leg higher, up to 16. But I wouldn't get too greedy because again, this is a corrective structure. This is not an impulse. It's not an impulse. So it doesn't. It would be very. Can't be impossible. I mean, this rule with the divergence erased isn't, sacred. It could be, it's not a perfect rule, so it could still, I could, still force a 5 waves if I can, but the odds are greatly, a lot lower. So I do think we'll get this bounce, and then more than likely the market rally will continue higher, and that's my forecast at the moment. So what would have to happen to change that? It would have to extend here. So this, we would want to see this. Let's say we got lucky and ended today. If this Y were to come back and break 1782, then this is just a 1-2. Then you have your super crash. So but like I said, I think the odds of that aren't likely. But hey, we'll know soon enough, because if that's going to happen, we should just blow through this box like it's nothing, because this would be such a significant drop, and so this won't take a while to get here. This will happen really quickly, and we'll just blow through that. We'll know right away. So that's the setup with the with this SPXS. So. Yeah, let's take a look at Rivian. It's I don't even know where I have that. Maybe I have that in here. Let's see. Yeah. So we predicted the 5 waves up and end it, and we pulled back. I mean, you guys can look at this. This looks like an impulse down, right? I mean, it looks like you could probably easily get your 5 waves here. You have your bullish divergence. So this is clearly some kind of impulse. Somewhere here is your wave 3 low. I won't even worry about labeling it. I'll just say it's an A. And now we're in B. And we should get C. C should probably fill this gap. So that means B. I bet B's going to pump a little more. This wave looks like it needs more development. It doesn't look developed unless it's some kind of flat. Here, maybe I could put it there. So, I'm just looking at it. 1, 2, 3, 4. You could say it's done here. So I guess you could force a flat correction and put it like that. But you have no divergence. A little bit there, so maybe it's possible. So it could be a flat, but the other alternative is it's in this wave, and since this is a finishing, it's probably going to pull back and do something like that. And then down one more time. Then Ford, Ford's been a mess, right? My last update on Ford was like it was in a lot of trouble, and I said that implied that their EV bet is going to fail. Okay, so this is my Ford chart. We did this many months ago. 5 down, a connector, and now we're in a 2 wave. that needs to finish down. And yes, look, it's going to probably break this low. This structure is telling me Ford is going to need another bailout. What this is telling me is Ford bet the farm on EVs, and that bet is going to fail. So if I'm just telling you what the chart is telling me, I'm not. I don't. I don't want to hurt anyone's feelings, being so bearish. But I would never buy this stock right now. Uh, this could be 1-2-1-2 setup, something like this. 1-2 3, like something like that, which is probably what I'll go with. So just there's too many possibilities. There's also, we could put the 2 here. Yeah, maybe that's a better play. It's like an A, B, C. So I would stay away from it. It looks like to me, and I think that wasn't the CEO going on a tour of the dealerships to learn firsthand what the issues are, unfiltered, because there's a lot of problems in the company right now. Yeah, just that's what I'm seeing. This chart is telling me that this low will break right here, and that means probably their bet in EVs went awry. Is not gonna work out. That's what it's telling me. That's just that's what the chart says. So good luck. Now to negate this view, you need to come back and take out 26. And then it could become a 1, 2, 3, 4, 5 and pull back. But it doesn't look likely. Yeah, FOMO into puts. Yeah, I mean, people buy puts. I don't trade puts because of the timing aspect. But yes, am I short the market? I am. Heavy. Not like I've been heavy. I've been more short, but I mean I need to start being aggressive. But I am understanding that there could be a little more upside still. But I do think it's time to get more aggressive given the conditions. It's like all about risk reward, right? The reward could be significant, so I'll be willing to risk more. GoPro, yeah, it's that wedge. The problem with GoPro is if the small caps keep going down, which they should, GoPro is going to get hit like the rest of the market. The market conditions aren't good for any long stocks. I don't like to be long anything when the market conditions aren't favorable. It's like swimming up a stream against the current. You're going to lose. 90% of stocks will fall with the market, regardless of how well they do. Yeah, I'm not even sure where it is here. How's it doing? Let's see. All right, so looks like that's a 1-2. Yeah. Some kind of corrective move. So I don't like trading it at the moment. I do think it's going to go deeper in the wedge here. And obviously this wedge is pretty big. But I do think at some point when it comes out, it will be a massive opportunity. That looks like 5 down, 1, 2. So this looks like an A, B, C. So this is Y. So here's your A, here's your B, and now you're in your C leg, your final leg lower. So it should push, if it's symmetrical, it could push to the low 3s. But I would expect it truncates in this area with the divergence erased. But I think it's more downside coming because the market's going down. So something like that. But yeah, I do think though you keep an eye on it. One day it will be a good investment if you believe in the company. What do you think on the? Well, what I've heard about the Money Supply Anonymous and thanks for the 5 it's one of the few times ever it's shrunk, right? In the last times it's done that, it's been a massive recession or even the Great Depression. So yeah, if the money supply is shrinking, that's underlying deflationary, and also the speed of the rate hikes has not trickled into the economy yet, which it's going to. There's a lag effect that's well studied by a lot of PhD economists, and that will hit at some point. And essentially, it's like a tsunami that comes in, and then all of a sudden, the ocean disappears, and it's just like bam, it's in your face. That's what's going to happen with the recession. I think it's just going to come out of nowhere. You're going to all of a sudden get earnings like huge misses. Like we were like doing great and everything's perfect to holy shit, the phone stopped ringing. What's going on? And I think that's the lag effect. And then there'll be panic, and then the Fed will panic, and then the Fed will start cutting rates, and then that will be the end of this thing. And then it should be like it used to be, and we can go long, and the bear market should end. That's the idea, right? That's the idea. So, but yeah, I think that's what's coming. There's people I follow that are predicting this credit event or this recession, and I do think I think that will happen based on my little bit of understanding of economics, because the rates went up too fast, too far, and it's like the Federal Reserve's like playing with the hot water in your shower. You turn it on and it doesn't come out hot right away. So you turn it up more and more, just like your 5-year-old does, and then you're like, shit, it's not hot. So you turn it up all the way, and then all of a sudden you burn your ass, and then you're like, shit, I turned it up too high. So I think that's what the Federal Reserve did with rates. They raised them. They want to see an effect. There's no effect. Raise them more. Raise them more. And now they raised them so much, I think all of a sudden that hot water is going to flood, come out and burn everyone. And the burning will be the stock market and earnings, and then they'll have to hurry up and shut that down. But the damage will already be done. And the idea is they're able to reverse and before there's too much damage and we don't actually kill ourselves in the shower. So we'll see what happens. That's going to be very interesting. But I think that's coming. That's coming. What do you do when you anticipate a drop? Do you sell? So I don't trade calls and puts because a couple reasons. One, finding timing is very hard. If you look on my Twitter, my story with puts was the I believe it was 2018, where Powell, I think it was 2018 or December, where he raised rates and the market didn't want him to, and then all hell broke loose in December, and then he reversed course in January, and everything rallied. I was loaded with like 150K of puts, 2-week expiration day into that interest rate event in December, and I watched as the market chopped around. I watched the money disappear essentially, and I panicked, sold it, and then I think I lost most of it, but not all of it. And then of course the news came out, and which was right around my expiration, and then all hell broke loose, and I would have probably made maybe a cool couple $1,000,000 on that if I held it. So after I learned all that lesson, I said, yeah, I'm not messing with these anymore, because they're like nuclear weapons to me. So I just trade now stocks and short. I short it traditionally, or I use the levered bear funds. But I don't do the calls and puts. Occasionally I'll do it if the setup is so like obvious, and I've done that before. I've posted that on my channel. But it is rare if I go back in them. I just haven't had much luck with calls and puts, so I don't mess with them anymore. Okay, so let's take a look at what other questions do you have. Zcash. Oh wow, no one's. But that's been a long time since someone's asked about that. Let me see. Do I even have that chart? I think I do somewhere. Yeah, I must have got rid of it, but I think it's been. I've had it charted somewhere. Damn. I wonder which one it is. Let's see here. ZK, is that the symbol? ZECUSD? Yeah, let me see. Maybe I used the Bitfinex one. I need to find the one where I had my chart, because I have charted this one before. I just don't remember what exchange I used. So we'll just open all of them, find it. None of those. Let's try Coinbase. I don't think I saw Coinbase on here. Or Binance. Yeah, if I can't find my chart, yeah, it's gone. I don't know what happened to it. Well, that sucks. I had this charted for a long time, and it's gone. So I don't want to take too much time to redo it. But if I remember correctly, 3 waves here, and then a connector, and then down in Y. And then there's your 1, 2, 3, 4, 5, your A, B. And now C. One, two, 1, 2, 1, 2. See, this just is not good unless the C is like a end in diagonal, or yeah, maybe that's what we could call it. So yeah, let's do that. Let's call it like that. A triangle or something. I think that's what they call it in Elliott wave theory, something like this. And then it should be 3 swings. So that's your connector. So it needs like one more 3 swing move out of it. So not much left to go, right? It looks like it's almost there. 1858, somewhere in this area. So it's close. So is that wedge, right? This is the wedge, right? This is typically when you see these patterns coming to an end, they'll form this kind of wedge. Yeah, I think Zcoin's kind of like this. I think if it can come out of this wedge, then you could say it's finished and it should start its next bull cycle to at least correct this entire move. So it should come back to like 93 at the minimum. If not, you get lucky and it goes to new highs off of this after this drop. So anyway, we'll just add that back in here. Let's see here. Yeah, DocuSign, Lab Up, and Path. Okay. Yeah, DocuSign. That one is still hanging in our buy area. It did break this low. That isn't good. If this is a connector for this entire move, then it's a go to zero chart, and I would want nothing to do with it. But I mean, technically, it's holding up. I would have liked to see 46 hold. It didn't. It broke it. So it's going to extend lower. You really need this low to hold at 39.63. But until it breaks, it could really bottom at any moment. Does it have earnings coming up? Well, look at that. Earnings are coming up. So it's ripe for a 3 of 3 breakout on earnings. I mean, the chart is begging for a breakout, but it sure as hell can break down too. So this is a high risk, high reward setup going into earnings. If you feel like rolling the dice. So yeah, I mean, it could still push to 42.33. But I mean, here, actually, you put that there. there's three, and there's your third one. So yeah, you really need this low to hold. That's all I'm saying. You really need that low to hold. If not, I mean, look at this pattern that just completed. Like head and shoulders of the ages. Left shoulder, head, right shoulder. There's no more room. I mean, there's no more room. So it's do or die for this company. It's do or die coming up. But yeah, if it breaks this low, then it's going to set up a whole new bearish sequence lower, and it's going to come down to the single digits at some point. Is my thinking. So I don't know. This is there's no reason to think that that's going to happen, but the chart is weak. This is really weak here, and I would say if you're going to try to play this in the earnings, you better be ready to risk it all, because it's just a huge move. I think there's a huge move coming on earnings, but it is in the buy area. It does look like a 1-2 setup. This looks like an impulse off the low, so I guess I'm biased bullish on it after it tags off maybe a little bit lower. And then lab up. Yeah, lab up's been kind of ugly too, right? And what's it been doing lately? If I can find it. So it didn't. It's if you were buying it here, it stopped out, and I think it break this low again. It has to hold this 429 to keep this count valid that I have here. But as you know, the Russell should go lower, so more than likely this pattern is not going to play out bullish. So I don't think this is the right forecast. I think the right forecast is as a descending triangle that's going to play out on the downside. So I wouldn't trade it until the Russell bottoms. So this could see 184 for the next area to buy it. If this breaks, if these pivots break right there and right there. And then the next one you had is path. I want to say we've done this one before. Yeah. All right, so we had this X wave bounce here, and now we're going down in Y. We never, it's interesting. We never made it up to this short area, so it was never could quite get there. So let's take another look at what's going on with this thing. So it did hit our buy area, and it has come out of that. Here, this connector. See, the reason we wanted it higher is this connector is just way too shallow. Right, this looks like it's going to be a flat. That's what. See, this is just the most probable path because it's just too shallow. But if this is the connector for this entire move, then this thing's going to zero, guys. This company's is in a lot of trouble technically because we already broke the low, so we know it is gonna come back down and break 1049. I still think it's I still think this is too bearish. I still think it's gonna do something like this, and then down. So this to me looks like it's just 1-2-1-2 of some kind. And then it should get rejected. Down to a new low. If this happens now, that's really bad. So I have a hunch that it's going to do something like this. Left shoulder, head, right shoulder finishes. So this is what I think, but I wouldn't feed at the trough too long if we get up to this area. It could easily fail at 2505 here. That's the area that it could easily fail. So that's kind of it. So that's what I'm thinking there. Let's see. Keep going. Already did Rivian, so you could try or watch my earlier part of my video. T TMDX. Let's see here. TMDX. What is that one? Okay, we've got that on here somewhere. So we predicted this fifth wave. We got it, and look, just a little bit off. So this A should be finishing up. So we should be bouncing soon, but we'll go lower. So we did predict this buy here. It looks like it just missed our target area by like 20 cents or so, but close enough. It finishes off 5, and now it's in a 1, 2, 3, 4, 5. So I'd be looking for a bounce, a more substantial bounce, and then it should go lower. One more swing down to finish this move. Yeah. Now the other alternative, just looking at it, is it could be a crash correction because it did break to the wave 4. So we could have the 5 here, and then I could put something like that, and this is in 5, and then we could call it finished, ready for its next wave higher. This one would be really difficult if you look. Let's take a look at the weekly cycle. So see, I don't think we broke that cycle yet. So we need probably more downside. See the monthly, it's not done yet. So yeah. So I think we want to see that monthly break, and by the way, look at the monthly candle. I mean, that's pretty nasty. So yeah, I would call this the fifth wave here. Maybe you call that a run-in flat, and then it's up 5, and then it's in an ABC. So it should be bouncing more, and then it should drop one more time. DRN. Oh, real estate bull shares. I haven't traded that. Have we ever? I haven't. Yeah, that's an interesting one. I would imagine that probably trades counter the rates. Where did it go? There we go. Huh. All right. So again, this was kind of a more bullish interpretation. A 1, 2, 1, 2, 1, 2. I guess as long as that low holds at 766, it's not invalidated, right? This seems too bullish to me given the market conditions right now. So let's go to something that's a little more likely. Again, descendant triangle. In here, you have your 3, and this is your connector for another 3 lower. So it's probably got a reverse split coming soon. Yeah, see, there's your 3. Actually, that's a triple. So this is kind of a rare pattern. You don't see the triples too much, like this. So it's a triple, and then this is some kind of corrective pattern. So maybe a little bit more upside, and then it should take a whole nother leg lower, right? And then it probably will break this low at 438. Let's see, when I was looking at this, you see this kind of like fifth wave move, but you see here this fifth wave really looks more like 3. So if we look at this, and then this looks like 3, again, this could be not an impulsive structure. So let's take a look. And you see how this dropped and corrected the whole cycle here. So this could be just a part of an elaborate sideways correction. So in fact, this could be a really complicated corrective structure. Like we could be in like a WXY here, and then you have here some kind of another WXY, right? For a bigger WX, and then you have Y here. So it's just a mess, and I'd have to sit there and stare at it and label it. But I would never trade this now, especially if rates are going to go higher. Because more than likely, if rates go higher, this is going to go lower. It just seems like more logic to me, and I think this will break down lower. So I've got about 10 minutes, so if you want your question answered, a super chat, I'll go right to it. If not, I'll just go in the order. So Robinhood was a tough one. I wanted to see that wave 5 come out of Robinhood, and we may still get it, right? This fifth wave. I want to see this push up, but this is a tall order. This is a tall task to get to this up here. So it still may not do it. If you look at this 2 wave, you see I had this like sideways and then you dropped. So we could still be in this 4, where you go sideways here and then you drop and then you come back up later. So, but it seems to me that this pattern is in 3. Let's see, take a look. Go to the 4 hour. Yeah, see? So it's tough. I mean, you could put the 4 here. It may be by some miracle it pumps. And then, and get this 5th wave. But I wouldn't be surprised, like with the rest of the market, it makes another swing lower, just like you saw here, where maybe it goes up a little more tomorrow and then drops, something like that. And you get 4 that way. And the other alternatives could be a 1-2, 1-2. I absolutely would be a buyer here if it came back down to this area on that trend line. So we'll see. Well, I'm not really too sure from that one. LCID, okay. LCID, what is loose? LCID, is that Lucid? Okay. So we do have that one on here. All right, so we looked at this before and we saw it as a 3-wave move with the buy at 593. And sure enough, at almost right at 593, it went completely vertical. But now the move could be over, right? Because it corrected. So let's see. And we broke the low, right? See how you broke that low here? This pump corrected this cycle. You can see that with the RSI reset. So yeah, it just here's the thing. You see there's also divergence here, so it could easily be this flat. And then it goes the next leg lower. So it's good because it broke this low. I don't like this bottom anymore. See, it even broke the whole cycle. You see that? So this move corrected the whole thing from an RSI standpoint. So the question is, are you still in X? It seems like this would be so bearish, right? If this is done, then this is in a lot of trouble because we made this lower low. And you did an erase divergence, which means this will erase divergence on the weekly. The weekly cycle hasn't broke yet. But if I see that break, that would be a massive warning sign that there's about to be a pretty big drop. So this is really tough. I would say if you see this low break at 549, that would negate this flat setup, and then more than likely it's going to head down. If I was long, I wouldn't want to be long this, but you got to do what's best for you. I hope it works out. This also, if that peaked here, this could easily be your first leg down, your A leg, in a 1, 2, 3, 4, 5, and you could be in B and come down. So this could also pop a little bit more and then drop. You could even say, so there's too many possibilities, but I think it favors more downside. At some point in the future, it should drop lower. Okay, since I'm coming close to time, I'm just going to scan through the comments and see if I can answer anything quickly. Yeah, gold I think is dependent on the dollar. I don't know if I showed the dollar index real quick, but the dollar index is I think what drove the market to today a little bit. So was able to get some more clarity with that move. So I mentioned that we would get this drop. We could still drop more, but I believe this move here will reset, and we're going to come up to this area that I have here highlighted. And when this happens, gold should drop. So gold may be a little more bullish in the short time frame, but I am looking for this drop eventually once the dollar drops, and then gold could be purchased again. So I am looking in this move, and gold can end at any moment. It really can. I mean, let's take a look. Yeah, it missed the sell area by $1. So it's like right at the short area here. Right, it's right there. So gold could reverse at any moment. But I mean, technically, it looks like it needs one more little spike higher to get that fifth wave. Yeah, Tesla could have been a short today, guys. And I think it hit a short area today. Yep. Yeah, today Tesla hit the short area. And I believe let's take a look at what we got. Yeah, so uh, again, I was showing the buy here. We popped in the connector. And now we need the first move here. And now we have 1, 2, 3, 4, 5. So we need to see if we have divergence. No, so we need more divergence, I think, on the shorter time frame. So it actually should pull back and probably come back again. So look for that if you're trying to like day trade Tesla. I wouldn't be surprised to see something like that, where it drops and then it comes up again like that, something like that, and then that's it. So something like that. But again, I could be wrong. But do what's best for you. Yeah, Disney broke those pivots, man. I wouldn't want to be in it. I think Disney's got a lot more downside coming. Oh, I changed to a frog. Yeah. Oh, my photo was my dog, and then yeah, my daughter sent me a new image and said use this one. She does this digital stuff art, so I use the frog now. That she did for me. She wanted me to use this for the channel, and I don't mind it. Change it up a little bit. TTT ultimate low. Man, trade desk is if that's trade desk, I think that's that symbol. I don't like trading it here. That's one of the very few tech growth stocks that has had no capitulation like a DocuSign and all these others. It's due for that. It's due for one day you wake up and it's down like 50% and they're bad. Or like I just see like it's just a massive trap. I just am not a fan of buying it because it really never had that capitulation drop that I would be looking for, and I don't want to be in it when it happens. How are you trading SPY? I don't trade it at 10 p.m. I don't trade it at 10 p.m. I trade it at during I'm on Pacific time, guys, so which is the best time zone for traders, I think, because you can trade in the morning. You don't have to wait for all that bullshit on TV to get, to go through, and then trading starts at 9:30. Like you essentially wake up and you're ready to trade, and then during lunch you can take a break. If you're working or have another job, you can trade in lunch, your lunch break, and the market closes. It's like the best setup, and then you have your whole afternoon free, and you don't have to think about it. But if you saw, there's futures. People trade futures at night, and that's like all night. But I don't trade the futures market. Yeah, at some point we'll get that going at Discord. I hope. Yeah, as I get more subscribers, that's the next phase. I'll have a subscription service where I'll give more direct setups, entries, stop loss, more details, and more live streams during during the market. So that's coming. I just need to get more. I want to get one more. I want to build the channel more this way. SOXS could have been a great buy today, which is essentially SOXS is essentially short AMD. If you believe in short in AMD, then buy SOXS. That's kind of the opposite of what AMD does. So AMD was in a good short area today, so that means SOXS was a good buy. Yeah, I mean, I had that target on TLT in the 80s, right, for a long time. So that means we need that fifth wave to extend on the 10-year and 30-year a little more to get there. But I mean, I don't really care that much about trading bonds because the setup isn't that clear to me. But it is interesting to watch and think about. What would it be like if rates got to 8-9%? Okay, I skipped over you. You were before gold. Let me see if I did anything. Let me see your name here. Goblin Rifle. DG. Oh, Dollar General. Yeah, no one's ever asked that. It's funny because I know it's a popular one with a lot of traders. Okay, well, I hate this setup because this looks like a flat to me. So it's in the buy area right now. See how easy this is, right? So, but it does look like the flat isn't finished, unfortunately, because you need 5 waves down, and I only see 4. I see a 5th wave trying to finish up here. So we should, if you really try to pinpoint a target, you could see 145, 137 there, somewhere there. Yeah, and you want to see that bullish divergence. That's good. And then in the higher, yeah, so this is a grand supercycle correction. So I don't even have to label that. It's just 1, right? And now it's 2. So if you're a long-term investor, you need to be pulling the trigger right now, right? I mean, that's what this chart is telling you. Like, I don't know how picky you want to be with your pricing, but I mean, this looks like it's ready to roll. Once you get this 5th wave done, you met all the technical requirements. So we're gonna mark that as on my watch list. So maybe when the market sells off, this will push, but maybe this is a recession stock that everyone will go into. So who knows why? But I do think looks like a pretty good opportunity here. Pretty easy to read chart too, which you don't get those all too often. But good luck with that. So DG, something like that. So my system will take a long time to explain. As you watch more of my videos, you'll learn it. But I use a combination of Elliott waves and market, how the market interacts with each other, that I call market dynamics, I guess is the word, along with RSI to forecast the market. But I also bring in some fundamental aspects too to the longer term view as well. I weave that in. So there is no book on my system. It's been taken from different traders over the years that I've followed, and that's how I've developed it. There's a lot of free information on the internet with Elliott waves that you can learn that will tell you how to do the basics of what I do. But then, then just experience a lot of experience too, just kind of rules I've picked up because I've watched the market over the years behave and things. So anyway, there's no real good system. That's why at some point I'll have to do a subscription service and do live trading with people, and you can understand it better. But I mean, the gist of it is, you know what I mean? You're just kind of looking for, just like I analyzed this chart in like 5 minutes, right? I knew nothing about Dollar General. All I knew is we have a corrective structure. I saw the three waves. It's a flat. So you have an A, B, C, and then a flat. The C leg has to be in 5. And you have easily, you can see the 5 waves here, right? 1, 2, 3, 4, but you're missing the 5. And then you do the Fibonacci extension on the B to get a projected target, and you can do that again on the 4, and that's it. So in 5 minutes, you analyze the chart, you get in. That's how I do it. And it's not a lot. You see, it's not a lot of. It's not complicated. It's not a lot of, science, and you don't need a PhD, and you don't need to go to hours and hours of online classes by some guru, and it gives you 7 indicators and watch the money flow. And again, I call that playing chess with the market. And I think traders that play chess with the market always end up losing because the market isn't chess. It isn't designed for people that have, that are part of Mensa or have a super high IQ. They're not billionaires for a reason. So the market is more sentiment driven, and it doesn't drive by logic and theories and calculations and using 7 technical indicators and then finding a formula. Like all that bullshit just is going to mess you up. In 5 minutes, I probably 80% this trade will work in the next 6 months. Like just in 5. So that's my system. But other people, they want to, they'll follow. You guys can play chess with people on the market, or some people just use pure fundamentals, which aren't good either, because sentiment really is what drives the market. And Elliott waves is sentiment. It's a way to measure sentiment. And the Fibonacci's is a way to trade with algorithmic traders, because the algorithmic traders, they don't give a shit about Elliott waves. They just use fib levels, right? To go in and out, and pivots break and they sell, and pivots hold, they buy, and so you have to kind of use both to make it work. But anyway, guys, that's all I've got. Yeah, so DG, I did DG. Yeah, coin. Yeah, just coin. I think coin's important because coin is sending a big message. I've been telling you guys this. Coin is giving you guys, look, it's 3 waves up, and I said this before. This is bad for Coinbase. This is a corrective bounce for a whole move down, which means that this low at 30 is going to break if we can't retake this high, and that could push you down to 1289. Okay? You got to take this high out at 115. If you can't do that, then this thing can go all the way back to 12. That's why I don't like trading it. And some people's like, how could Coinbase do that? They're, no way. You're stupid. You can't. I don't know. Maybe they're gonna get sued by the SEC or something. Maybe Bitcoin's gonna collapse with the market. Maybe, they made a wrong bet in the corporate financial structure. And I don't know why. I could care less why. But the chart, this is not an impulse. I mean, this, guys, is not an impulse. There's no 5 waves here. This is a corrective structure, which means it's a bearish bounce. That means the trend is still lower. So Coinbase is a dangerous stock to trade. and I would stay away from buying it. But you guys can do what's best for you, and good luck. But I would look at all these other crypto stocks you can trade. I have here so many. I would leave that one on. I wouldn't touch it. Now, if for some reason it goes down to $12, yeah, then I'll definitely buy it. But I'm not going to buy it here. And we did call the low, guys, by the way. If you followed me at 32, we called that, and we did ride that up to 85, and then I sold it and got out. And yeah, I did miss this move, but I could care less. I made a lot of money on that W. But I do think, yeah, the next area, if we do lose, we do lose this $30 area, is going to be 1247. It just is. It's just that's where it wants to go if we're gonna break that. And if we do go down there, yes, I will be buying a bunch of it right there. But we should get another bounce just like we got here. We should get another nice bounce. Oh, a last minute super chat. You just got me before I left. Bowen and Chevron. Okay, so Bowen. Didn't they have a Supermax problem? Bowen did. Yeah, Bowen had another issue with their their Bowen Max or something, which I've always said as an investor, that's a ticking time bomb. All right, so we're looking for this fifth wave. We could see something like that, but I think that's too extreme. So then you know what? It's something like this. So it looks like that fifth wave's over. So I would be looking for it to go back to 192, 180. So this again, this coincides nicely. So this is an impulse, nice beautiful impulse, but it's over, and it should come back maybe like 183. I'm still looking for the ultimate sell target at 330, which should happen at some point, which could bring it to new all-time lows. But I think for right now, it should just a buyable dip somewhere down here when it gets there. So again, every three swings. So you have your three swings, you bounced. So the question is the bounce over? It could be. Let's just say the bounce is over. That gets you down to the area, the buy area. So there's your buy right there. And then this is your setup. Something like that. Okay. But there's no guarantees it will stop there. It could continue. It's in a bear cycle. It's clearly the impulse is over. So, but it should have a pretty good drop coming. Chevron. Let's see. So I'm bearish on energy. At some point, I'm still looking for that fifth wave in oil. That means Chevron could still go higher in the shorter time frames. Let's take a look. So I got this in this two wave. Okay. This is what I'm thinking. Just kind of looking at it right now. I want to see oil a little bit higher. So my guess is we're going to come up a little bit more. And then come down. So my guess is it's got more upside on the shorter time frames. See, there's your connector right there, and you made a higher high. So it seems like it wants to go a little bit higher here to 170, 173. And then that rally should fail. That rally should fail to get to finish the flat. Yeah, that takes you down to here, 119. And that would be a back test of the breakout, right? Which is kind of technically, that's kind of like from an art form. You had this breakout. It's just like a back test of the breakout before you get to wave 3. So, that'd be pretty elegant technically, right? You come in, you back test, and then you're out. And so that's another thing. Part of my methods, I do use chart patterns to help as well. You know, chart patterns, typical resistance support. So I also weave that in when those stand out to me. Yeah, I think, but you know, I will have to say, you know, there's no guarantee we'll get this pop, but it just seems likely because the forecast of oil. You know, when I look at oil again, I want to see this fifth wave. You see this fifth wave, and then it should be it. The problem I have though, like I said, with a corrective structure, could always be in three, and we may not get this flat. And I can easily change it and put the X here and put the W there and then call it done and then just starts dropping. So oil's a real coin flip. I wouldn't mess with oil right now. That's why I'm not in the energy trades anymore. Up another last minute super chat. Thanks, Delta Lions. Okay, I'll do the ones I have first. DraftKings. So yeah, that one is hopefully trying to finish this five like Robinhood. So like Robinhood, I'm looking for this fifth wave. Perhaps we can get there, and then we should see a sharp pullback back down to probably retest this breakout at 21. That's what I'm looking for. But again, I can't rule out that we're still in four, and we do something like this. So it's like a coin flip, you know. Here you know your race divergence. So this is your connector. There's your yeah. I would say it's tough to say, but if you look, this went from August to December, 5 months. So August maybe to December, the same thing, you know. So I think this four could still take time to play out. And then it can also become a 1-2-1-2, which probably it will morph into because it's so far away from its all-time highs. So it's just I think in the ultimate scheme of things, I think it's got more downside, and then it should rally. I don't know if it's a 3-4-5 or a 1-2-1-2, but I do think it's got the drop with the market into this area, just like it did here. And then DNA, you know, let's take a look at that one. So we called the buy area here, rocket. Again, here's a pattern. It broke out. We called the next buy area here, rocket out. So I mean, right now, what I don't like about this drop is it's not. It looks like an impulse down. So I would say that it's got more downside to finish the correction like the rest of the market. So I think it's an ABC. So this was an A, B is C, something like that. It could still see some more upside, but I think it's coming to an end soon, something like that. And again, it has to hold this low at 114. But this should end at any moment. But it could still get a little more here. And then PBY, what is that? I've never heard of that, I don't think. Oh, Puma. We've looked at this before. So we called the two here. We're coming up. What I don't like is there's no divergence here. There's a little bit. It's very little divergence. So let's give it the benefit of the doubt that it's yeah, this is a whole cycle here. 1, 2. It seems too bullish. I mean, it could be this, like that. It's just looking at these charts, as long as this, so this is your next pivot. So as long as 293 holds, then the bullish setup's intact. But once that breaks, then this will unravel to the downside very quickly. So I think for now there's really no reason to say it should go lower until the charts show that. We see impulses up with divergence here, here, here. So there's really no reason to think of this as a bearish setup at this moment. So I'll just leave it at that. I mean, there's always risk going into it. I can be wrong. So do what's best for you. We could still be in this two wave, could still drop more to like 316, but it really needs to hold that 292 level. Yeah, more than likely it's going to drop again in this ABC. And again, you want it to really hold that level. And you need to erase that divergence. Let's go to the 4-hour. So you need to take out this RSI right here. You got to take that out. Although, yeah, see, you still have divergence. So yeah, I think this is a real tricky one. Because if this is a 5 and a 5, you could say this is an ABC, but this didn't end in the way I would have liked it either. Um, there is a chance, and again, it's a small chance that it's this too, like that, and then you can get a deeper pullback. So it's really tough to say, like which one it is, but because you have this divergence here from this peak to that peak, you see that you could kind of label it this way and call this one big cycle that's going to correct when that drops. So I do think it seems like it's going to make this drop I have in C, but the cycle should continue at some point in the future. I don't think it's likely it's just going to go moon from here. I think it's got a drop coming. Okay, guys, I got to end it up here. I'll just, if you didn't get your question answered, super chat next time, or, I'll just try to jump to it. And good luck trading. We'll see if we get a market reversal. Like I said, it's tough to say, how high we'll go, but I don't think the upside. I think the upside should be limited. This is the futures market, guys. So it looks like the NASDAQ could have a little more upside. So that means the ES could push a little bit higher. The Dow is, already in these areas. So the market's in a very dangerous area to be going long right now. That's all I'm going to say. But good luck.